Again, I mentioned that SASB, the Sustainable Accounting Standards Board, now this is a US-based NGO, which is different than the IIRC, which is international, focused on publicly listed companies disclosing material sustainability issues purely for the benefit of investors. IIRC is taking that broader look, looking at all stakeholders. SASB is really taking a more narrow look at what are investors caring about and are the material information being reported there. Now, the value that SASB provides to companies is that, again, it helps them improve their internal decision-making, helps them integrate sustainability into existing activities. It helps them understand what activities they are taking that maybe they should drive more value through industry-specific metrics. And to investors, it's enabling investors to factor in the sustainability-related impacts when making decisions. They're able to look at an organization and say, let's assess their social, environmental, climate risks and opportunities into our portfolio. And it allows an institutional investor to look through SASB and engage with the company on key issues that they may have a concern or where they see an opportunity. If you're wondering how to quickly test, what's material within all these universes of sustainability issues, SASB has a great example where they show you want to look at three different things: the evidence of interest, evidence of economic impact, and are you looking forward? So, they want to look at 5 data-driven tests on the evidence of interest: financial, legal, industry norms, stakeholder concerns, innovation opportunities. On the economic aspect, they're looking at what are the values of all of these sustainability issues? How could they impact the business value of the organization from revenue, return on capital, risk, and quality of management? Looking forward, they're saying, we want you to be thinking about all of these sustainability issues, whether it's climate, extreme weather, business interruption, employees, supply chain. Where's the potential for systemic disruption? Where there's uncertainty, and what are the implications for the long term? So this is a way of looking at what are those things that could have a material impact on your company and what don't. If you're, let's say, a US-based PR company that never does anything over abroad, you're not really worried about workers over in Bangladesh or Burma or anything like that. However, if you're for a large manufacturer or an outdoor retailer that has plants in those areas, you might absolutely be concerned about that. So this is a way of doing a quick test to see what's most material on those issues. Where are you going to have the data? How's it going to impact your economic, and where do you need to be looking at from a forward-thinking perspective? To give you an example as to what SASB is looking for, here's just an example from restaurants where they're saying, well, these are some of the different disclosure topics. Here are the metrics that we want you to use, and these are the units that we want you to report them in. How the SEC and SASB are working together is the SEC has been asking companies to disclose risks, for a long time. Just recently, they've made it apparent and made it a requirement that publicly traded companies need to disclose their climate risk.